IonQ's stock has surged dramatically today. Could this quantum computing player be the investment everyone's been waiting for? But here's where it gets controversial. Despite the excitement, is IonQ truly a smart buy right now? Or is it just a high-risk gamble that not everyone is prepared for? Let's break down the key developments. IonQ shares jumped impressively after the company received approval from the UK's Investment Security Unit, ISU, to acquire Oxford Ionics, a smaller firm specializing in quantum computing. This green light from UK regulators clears the path for IonQ to complete the acquisition, which investors seem to have welcomed enthusiastically, pushing the stock price up by 18.3% during Friday's session. To put that in perspective, this gain notably outpaced the modest 0.4% increase of the Nasdaq Composite, and came even as the broader S&P 500 dipped slightly by 0.1%. Quantum computing itself is an emerging technology sector with enormous potential, promising to accelerate breakthroughs in fields such as artificial intelligence and complex simulation, which traditional computers struggle to handle. IonQ stands out in this arena by showcasing some impressive technological advancements, positioning itself as a potential long-term winner in this revolutionary space. The acquisition of Oxford Ionics might expand its capabilities further, signaling a significant step forward. That said, the stock's explosive upside comes with equally high risks. Quantum computing is still very much an early-stage technology, and IonQ's market value heavily depends on future growth and successful execution of its technology roadmap. Any delays, technical setbacks, or shifts in the broader economic environment, such as geopolitical tensions or a downturn in tech investments, could prompt sharp declines. This makes IonQ a very speculative choice and a potentially poor fit for investors who cannot tolerate high volatility and risk. In practical terms, for investors comfortable with high risk and looking to tap into potentially explosive growth in quantum technology, IonQ offers an intriguing opportunity. However, even these investors should be cautious about allocating too large a portion of their portfolio to this stock, given its current high valuation and the unpredictability inherent in its sector. Now, you might wonder if putting $1,000 into IonQ right now is a good move. Before making that decision, consider some broader insights from the Motley Fool's Stock Advisor team. They recently identified 10 stocks they believe have stronger prospects than IonQ at this moment. Stocks carefully selected like Netflix in 2004 or Nvidia in 2005 have gone on to produce astounding gains, multiplying initial investments over 100-fold. The total average return for Stock Advisor's recommendations is an eye-popping 1,056% compared to the S&P 500's 188% during the same time frame. Here's the part most people miss. Investing in emerging tech isn't just about chasing the next big name. It's about choosing companies with solid foundations and proven potential for market dominance. IonQ might fit the bill in the long run, but right now, it's a wild card. Not yet a mainstream pick by seasoned analysts. So what do you think? Is IonQ the quantum leap in investing everyone should jump on? Or is it a risky bet better left to the most daring traders? How much should volatile, cutting-edge stocks like IonQ account for in your portfolio? Join the conversation and share your thoughts, because sometimes the most controversial questions spark the best discussions.